Okay, let's just dive right into this. Welcome to The Explainer. We are currently witnessing an absolute paradigm shift in our financial markets. The old days of traders shouting over each other on the exchange floor, well, those have been fading for decades. But what we're looking at right now is a massive, rapid shift from manual human trading to fully AI-driven markets. It's a completely different world. Artificial intelligence is literally redefining the role of the investor, turning what used to be this stressful game of human intuition into a highly calculated, data-driven science. So if you've ever wondered how exactly machines are outperforming humans in the market, or what specific tools you can use to kind of level the playing field for yourself, you are in the exact right place.
So, here's our roadmap for today. We'll be covering the AI trading revolution, how these AI algorithms actually work, the top AI stock pickers out there, advanced automation platforms, and finally, the risks and ethical dilemmas.
All right, let's kick things off with Section 1, the AI trading revolution, from Wall Street to Main Street. Take a look at this number, $11.2 billion. The global AI trading market hit that valuation in 2024, and get this, it's projected to nearly triple to over $33 billion by 2030. But to really understand how deeply entrenched this tech already is, we have to look backwards for a second. Even back in 2020, AI-driven trading already accounted for roughly 70% of all U.S. equity trading volume. So the machines aren't just coming, they're already running the show.
So, what exactly do we mean when we say AI stock trading? Well, by definition, it's the use of machine learning, sentiment analysis, and complex algorithmic predictions to analyze millions of data points and execute trades at the optimal price. Basically, instead of relying on a human analyst to slowly read through a quarterly report, the AI processes vast amounts of real-time and historical data instantly. It figures out how to mitigate risks and hunt down higher returns without the one thing that completely ruins most human portfolios: emotional bias. For you, this means making trades based on hard math, not just gut feelings.
Moving right along to Section 2, how AI algorithms work. Let's peek behind the black box. Now, what's really interesting about this slide is how it visualizes deep reinforcement learning in a complex market. Researchers use what's called an ensemble strategy. This basically combines different algorithmic agents, specifically ones called PPO, A2C, and DDPG. But hey, don't worry too much about the acronyms. What you really need to know is that these agents observe the current state of the market. Things like prices, account balances, and technical indicators. They then take an action, like buy, hold, or sell, and they receive a reward based on whether they made a profit or a loss. By constantly mashing up the best features of these three algorithms, the AI robustly adapts to ever-changing market situations in real time. It's like a highly disciplined virtual trader that never sleeps.
Of course, these reinforcement agents are supported by a whole stack of core technologies. Machine learning is the engine here, recognizing massive historical price patterns. Then you have natural language processing, or NLP, which acts as the system's eyes and ears. It instantly reads thousands of social media posts, news articles, and financial reports to gauge the overall market sentiment. We've also got generative AI, which simulates market conditions and creates synthetic data, allowing traders to backtest strategies against wild scenarios that haven't even happened yet. Combine all of that with the blinding speed of high-frequency trading and the forecasting power of predictive modeling, and you've got yourself an incredibly formidable system.
All right, let's jump into Section 3, Top AI Stock Pickers. This is all about bringing institutional power down to retail traders. This quote right here, it absolutely nails the modern reality of the market. In 2026, retail investors aren't losing money because they're bad at picking stocks. They're losing because they're fighting institutional AI algorithms with manual research. I mean, think about it. If you're sitting at home reading basic balance sheets while a hedge fund's AI is instantly analyzing real-time satellite imagery of retail parking lots, you are at a massive disadvantage.
So let's rapid fire through some of the absolute best AI stock pickers available to you today. If you want high accuracy signals, Cavill is great. They offer a highly quantitative chi-score from 1 to 9, which runs on massive neural networks. If you're a swing trader, Dan O'Finn keeps things incredibly straightforward by just giving you a direct probability percentage that a stock will beat the market. For those of you hunting for hidden gems, Alt Index specializes in alternative data, like tracking social sentiment and even app downloads. Now, if day trading is more your speed, Tickeron deploys AI robots that scan charts every single minute to identify specific breakout patterns. And finally, if you're just a busy professional with zero time to look at charts, Candlestick.ai uses its models to send you 3 top data-backed picks every single week.
Which brings us to Section 4, Advanced Automation Platforms. These are the heavy hitters for serious traders.
Let's take an objective look and compare the big three platforms in this space. TradingView has this awesome conversational AI copilot that literally lets you ask questions about your charts. It covers virtually every global market asset and allows you to execute trades using webhooks. TrendSpider takes a slightly different approach. It embeds AI directly into your workflow with multi-time frame automated pattern detection. I mean, it literally draws the trend lines for you, and it connects via webhooks or built-in brokers. Finally, we have Trade Ideas. They feature the Holly AI, which provides very specific real-time entry and exit signals based on millions of overnight simulations. Just keep in mind, Holly is currently restricted to US equities and integrates primarily with interactive brokers.
So, the absolutely crucial point here is, how do you actually get these AI platforms to execute a trade while you're fast asleep? Well, you use an execution bridge. Platforms like Traders Post sit right in the middle of this ecosystem. They act like a catcher's mitt, catching the webhook alerts generated by your TradingView strategies or TrendSpider analysis, and then they automatically route those signals directly to your brokerage to execute the trade. It creates this beautiful, fully automated pipeline across stocks, options, futures, and crypto. And the best part? You don't need to write a single line of execution code.
Now, we need to talk about Section 5, Risks and Ethical Dilemmas, the real cost of automation.
And this brilliantly illustrates the core of the debate, which really comes down to two models. On one hand, you have a fully autonomous loop. Data comes in, the AI processes it, makes a decision, and executes the trade in a fraction of a second, with literally zero human input. Contrast that with a human-in-the-loop model. Here, the AI handles the grueling high-frequency trades and pattern recognition, but it passes the big strategic decisions and risk management oversight back to a human trader. Finding the right balance between these two frameworks, that is hands down the biggest challenge regulators are facing today.
Let's look at this totally objectively. The pros of AI trading? They're undeniable. It massively reduces research time, drastically lowers overhead costs for trading firms, entirely removes human emotional bias, and processes data sets so large our brains couldn't even comprehend them. But we have to acknowledge the cons, because they are severe. These algorithms act as opaque black boxes, meaning we get very little transparency into how decisions are actually made. They can also over-rely on historical data, missing the impact of totally unprecedented global events, and worst of all, a single line of bad code, when magnified across thousands of high-frequency trades, can trigger a catastrophic market flash crash. And that's not even mentioning the massive cybersecurity vulnerabilities of having hackers target the algorithms themselves.
Which brings us to our final thought for this explainer. We are rapidly integrating systems that can process millions of scenarios and execute trades in milliseconds. So it really begs the question, as AI algorithms become faster and smarter than humanly possible, who is truly in control of the market? Is it the investor, the programmer, or is it the machine itself? It's a wildly fascinating and complex frontier, and fully understanding these tools is absolutely the only way to navigate it.